All right, are you guys there? Let's see here. Sorry about that. I don't know what's going on. It says now that we're live in Facebook. Um, I'm not sure if that means that you guys are in or not. So let me just check the chat real quick and see if you guys are hanging around. Let's see. Yes, Peg, you're saying yes. Thank you for the feedback. Anybody else can see me? All right, Peg says yes. Peg, but it might just be you and me tonight. I don't know. Let me share my screen so we can get the audio to work along with the video too. How about that? Amit, thank you for that. All right. Cool. All right, John, thank you. Mike, thank you. Uh, let's get rocking and rolling then. Thanks, guys. Sorry about that. Thanks for your patience. We're giving it a shot from the top. So let's go over what we're talking about here tonight. Um, First of all, welcome. And we're going to be really talking about how a six-figure portfolio, maybe you have one that's earning less than 20%, how that can become something that you can generate income from with the stock market without a lot of money loss. Now, you can always lose money in the market, but this has got a way of building in prevention of loss, right? It's a hedging type of portfolio like I run in my hedge fund. So I hope you have some fun. That's my main goal. Thank you for being here and thanks for your time. Let's get rocking and rolling. So here's what you're going to learn today: how to generate income from your investments like rent, but without the tenants. I'm going to show you the word system. You're going to hear the word system a lot for knowing when to put money into the market and when to take it out. How to adapt to any market to prevent yourself from losing money. It's not always about making money. Sometimes preventing loss is a better thing than making money, right? Especially in a market like this lately. So, and then finally, I want to show you how you can make consistent, reliable returns from an investment strategy that maybe you know a little something about, but we're going to dive a little bit deeper and tell you why it's the secret sauce, I think, of doing your investments. So who is this for? Essentially, it's for anyone wanting to manage their own investments, right? So if you're worried about inflation, which you should be because it's going crazy, like food is up, cars are up, the cost of living is up, power is even going up. So if you're one of those and you're thinking about getting rid of your financial advisor, or maybe just supplementing the work your financial advisor does by taking a bit of control for yourself, then great. If you want better returns in your bonds, money market funds, mutual funds, income or growth stocks. And by the way, when they say income or when they say bonds and it's the safe money because you get income, well, ask people that have bonds for the last 6 or 7 or 8 months since November, right? They've gone down about 30%. So while you're making that safe 3% income and it's supposed to not move around very much, you've lost 30% of your principal. And you got to wait till the end to get back par value. But if you paid more than par value, you're getting hammered in bonds. So at least learn a strategy for really making income from the assets that you have. That's what I'm going to talk about tonight. Anybody coming into a large amount of investable capital. So if you've sold your business, for example, or if you've got an inheritance, as another example, or you've sold some real estate and you'd rather not manage it anymore, you're thinking about getting out of that crazy Airbnb business because it's a lot of work. Fine. This could be for you. Let's say you're rolling over your 401k, plan, and you want to put it into something self-directed where you can run it. You can do that with this program, what we're going to be talking about. If you're not happy with your trading results, let's say you're dabbling in the market and you really want to kind of buckle down and learn a system to get a little bit more serious about the market. Like if you're just listening to Kramer or listening to the Motley Fool or reading something in a magazine and buying stock based on that, that's not a serious system. You need to have a system. Anybody just wanting to live off your money, if it's time that you stop trading your time for money, if you want to work less, if you're a retiree and you're about ready to start dipping into some of that money that you work so hard for, all that stuff is applicable here. Now, what I always ask people to do, and it's just kind of close your eyes, sit back and just kind of imagine, what if you could wave a magic wand, right? What would your life look like? What would a clear vision of success look like in 3 years from now? So just kind of think about what that clear vision might be. And in the next 3 months, maybe you found a system that you can start using. It's giving you a reliable investment strategy. You may have been looking for it for a long time. And now you're getting your money working as hard for you as you've worked for your money. Now you're on your way to earning maybe 20% a year, right? And we're going to be talking a bit about that tonight. How cool would that be? If you were confident that you could make money in the stock market, if you were confident that your investments were secure, because now you have a system that gives you that certainty, gives you that confidence, would that help you sleep a little bit better at night, right? Not think about your retirement so much. How would that feel? Now, let's imagine 6 months, maybe 12 months, 18 months, And you've been working this system for a while, you're getting confident, and maybe you're able to make a transition to work a little bit less. Maybe work part-time or leave work altogether. Maybe you're just starting to enjoy your retirement. Maybe you're spending more time with the people you love or doing the things you love. Like for me, I like to travel. In fact, I'm in Greece right now. Maybe you want to go golfing, spend time on your hobbies, spend time with the people you love, laugh, have some dinners and things like that. Well, it is possible. Let me show you some people that are involved with our program that have been able to do exactly what I just described. Lee up here on the upper left. Lee's sitting on a boat with us in Greece last year. There's Lori with the white hat, loves to travel. I think she's been to Costa Rica this year and Ecuador, and I think she was in Egypt too. So she's always calling us from different places and checking in. And Larry, a picture of one of his recent safaris with all those animals in the back in Africa. Eddie loves to ski. He's another physician. There we are down in the left corner in Athens, Greece last year. Ian's an entrepreneur, and he had a dream to learn how to surf. And so he started taking surf lessons in Costa Rica. He lives there full time, down there with his family, his baby, his wife. So these are the results of transition to doing something with their life, with their money that they weren't able to do before. And that's really what having funds and resources is all about, right? So who am I? Well, my name is Mark Yagi, and I've been doing this for a long time, this investment game for about 45 years now. And I don't even like to say that anymore because it makes it sound like I'm really old, but I'd like to at least let you know who you're listening to. So I've got a lot of years since I was a kid. Bought my first car with money that I made in the stock market. I was CEO of a Fast 100 Wall Street company. So I know what it's like on both sides of the fence on Wall Street. I traded over $14 billion worth of securities through me, my funds, my companies. I'm a hedge fund manager. I have 2 equity hedge funds. And actually, one of the hedge funds is a fund that utilizes exactly what you're about to learn. So I'm going to teach you kind of the philosophy and the basis and actually show you some stuff about how I do this. We target 20% a year. We exceed that most of the time. It's just been great. And that's the power of what we do in this system. So that's who I am. And then I get this question a lot. So Mark, why do you give away your secrets? And, it was a question that I got when I was a stockbroker, because I had this little method that actually I'm going to teach you tonight. When I started my own firm, people said it. When I would coach people and be an investment advisor for them, they would always say this question, and it'd be like, why are you going to give away your secrets? Well, I can tell you, I'm not getting any younger, and I really enjoy helping people make money. I like to help those people that I just showed you on the screen transition from, being stuck or frustrated into being able to actually have some empowerment. It's kind of, I think, why I'm put here, right? And so I really love helping people. And there's no better feeling that I get from the guy that I'm about to show you, who basically threw himself into the system, trusted what we built, and trusted me, most of all. That's a big, flattering thing. And then, threw himself and has got this thing kind of dialed in and figured out. And his name, by the way, is David King. When I met David, he was like 60 years old. He is an entrepreneur, lifelong entrepreneur. We're good friends now. And he had a broker that, like a lot of us, put their money with the broker, and the broker lost them a lot of money, right? He didn't have any power over it. And he asked me what I did. And I said, I run a hedge fund, I do stock trading. He goes, can you teach me? I don't know anything about it. The bottom line is he didn't want to give up control of his money. And I totally get that, right? So he went from not knowing anything to learning the system that I call the cash flow machine, because you put money into something and then it spits out cash flow, which I think is the key to creating wealth. And now he has a system to follow. It's not just trial and error where he's trying to figure things out and trying to figure out what stock to buy, when to buy it, and what the market's doing and all that stuff. He's got a system, right? It's a longer term trading strategy, right? It's not just a day trading thing, because most day traders I know blow themselves up. And, he's been doing this for years now. And he's replacing his other investment income. He sold his farm. He sold a couple of houses. He's rehabbed other ones. He's sold those so he could put the money into the system and start making that reliable income. So let me share the screen here so you can see my, all right. Anyway, so that's the bottom line with David. So he's got a system now that he follows, and essentially makes about $15,000 a week on most weeks. Some weeks it's not 15,000. Some weeks he loses money, but I'm just giving you some averages. He makes about 400 grand on his assets. He's bought several new houses. One of them was on the water. He sold it. He's buying a yacht. He's doing all this crazy stuff because he's trying to get all of his assets gathered and putting them into a program that we're going to be talking a bit about it. And a lot of people have had a really bad experience with financial advisors. And I was a financial advisor at one point, so I get it, right? They're told to sell a certain kind of investment, a certain number of things to gather assets, to not get sued. And sometimes it just hammers you, and you don't trust them anymore. And I get it. So I come from that world, and I want to help people understand a little bit of that world. All right. So let's get into the training. You guys didn't come here to just listen to me yap. So let's teach you something. And by the way, we have a program. It's called the Cash Flow Machine, but there's 3 keys to it. And there's 3 keys to this program or any program that you want to invest in that you should make sure that has in it, right? Any system that you want to invest in should have some really key things on it. So the first one is, I want to show you that the first key is to collect rent. I believe that when you invest, you should invest for cash flow. I've owned my own lots, real estate. I've owned my own non-cash flowing investments. I've owned lots of different types of things. And I believe at the end of the day, if you can make your cash flow work for you, that's an ideal kind of investment, because it does a couple things. Number one, it reduces your risk. And number two, it creates income. And at the end of the day, we kind of all want a little bit of income, don't we? And then the second part of it is to reduce your risk. So, people are like, wow, investments are risky and I don't want to, risk all of my assets on this or that. I get it, right? So you've got to make sure that you can protect your investments. You can hedge your risk to make sure you don't get hammered as well. And so we want to make sure that you're reducing your risk. And then this one is really critical right now, because we have this crazy market where the Fed is tweaking things and the government's printing money and we have inflation going crazy and we have all this stuff coming together. World events are happening. There's wars going on and currencies are getting deflated and inflated. And that's creating a lot of volatility in the market. And if you've been in the market, I don't care what market you've been in, you've probably have been affected by this. I mean, I know some people that have been in, stocks like Facebook and Netflix, and they've lost 70 to 80% just in the last 7 or 8 months when the market has just gotten hammered, right? And the market's officially, the indexes are down about 20%, 20 something like that. They've recovered a little bit. Now they're trying to figure out if they're going to go higher or lower. That's always the story, but you've got to be able to adapt to any market. So let's start with the first one. So how do you get consistent, reliable returns on your investments? So if you know anything about baseball, I use a lot of sports analogies because I think people can relate to them. Well, I'm not a big baseball fan, but I know that if you want to get on base, if you want to get a good, Hall of Fame type of batting average, you got to get on base. Don't swing out of your shoes and go for the home run because you strike out a lot. You just got to hit singles. You got to get on base. So that's the key, is most investors try to swing really hard and they hit home runs, or they don't swing at all, right? And they just get struck out. So you've got to get on base. And that's the thing. You don't want to strike out. You don't want to lose money. And you can lose a little bit, but don't lose too much, right? So the question I always get right about now is like, how do you hit singles in the stock market, right? I want to buy that stock that goes from 10 to 5,000, right? Don't we all? But it's a lot of risk to do that. So we want to switch that mentality into how to hit singles, right? Get consistent, reliable singles in the stock market. And how do we do it? We do it by selling options. Now, a lot of time people are like, oh, Mark, what are you talking about? Options are risky. I don't want to do options. And you're right. They are risky, right? That is certainly a concern. If you know what you're doing, though, you can flip the risk around. Let me show you how that works. So they are risky, I will give you that. But 80% of options expire worthless if you're the buyer, right? And so if you own an option, you have time working against you. When you buy an option, time works against you. When you sell an option, the opposite happens, as I'm going to show you. So the deal is, if you buy the option, you can lose all your money when you buy it, because it's a big gamble. 80% of the time, the odds are stacked against you, and time is stacked against you too. The time never stops ticking. Click, 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 right? And so you can really do that. And if you're swinging for the home run by buying options or leveraged investments, you can lose a ton of money. And I don't want you to lose a ton of money, right? If you gain nothing out of this, just don't lose a ton of money. So let me give you an analogy of how my system works and how this can work for you to create rent out of the stock market. So I'm going to do it by telling you a story. And most people can understand real estate. So let's say we got this guy, Jim, with the little red tie here, and he owns this land for sale, right? Maybe it's across the street from you. You look out your window, you see his land is for sale for $100,000. He's got a big lot, right? And there's this guy, Bob, that's driving down the street, and he hears in a rumor that there's a big hotel going up across the street or next door to Jim's lot. So that's going to make Jim's lot worth a ton of money. Maybe it's going to be worth $1 million or something like that. Maybe 200,000. So Bob goes, okay, it's going to be worth 200,000. Problem is, Bob doesn't have $100,000. He's kind of broke, right? So if he's broke, he doesn't have 100,000, but he wants the property because he wants to be able to make a killing. So he approaches Jim, who's got the property for sale. So Bob, the dude with the little beard here, goes to Jim with the red tie, and he goes, I'll tell you what, Jim, I'll pay you $10,000 if you sell your property to me anytime in the next 6 months for $100,000. So Jim goes, wait a minute, I've got the property for sale for $100,000. You're willing to give me $100,000 in the next 6 months, but you're going to give me $10,000 so that I take it off the market and I get to keep the $10,000 no matter what? Deal. I can't lose on that deal. I still own the property if you don't buy it, and I can get my $100,000 later. So Jim's like, wow, that's crazy that you're willing to do that. And Bob's like, yep, I'm willing to do that. I don't have the money, so I'm going to give you that. Now, let's take a look at who's got the risk here. So Bob, the dude with the beard, he could lose all his $10,000 if he's wrong, right? If there's no property built there, he was wrong, and he loses a whole amount of $10,000. But if he's right, he now turns a $100,000 investment, actually a $10,000 investment, into basically $200,000 investment, right? So he's got huge amounts of gain for a big risk. Big risk, big reward. Jim, on the other hand, no matter what happens, he gets the $10,000, right? He put it in his pocket the day that they shook hands on that deal. But if Bob exercises that option, he also sells his lot for $100,000, which is what he wanted in the first place. The difference is he creates $10,000 in income, and so Jim in this situation has still relatively low risk. So what can happen? Well, a couple things can happen. A week later, Bob finds out that it was all just a rumor and nobody was going to put a hotel in, and he was wrong, and the land is still worth $100,000, not worth 200, but it's worth 100. And so in Jim's case, the guy with the red tie, he owns a lot and he got a big 10% bonus. Or you can look at it a different way, is he reduced his cost because the income now reduced his cost against his property value. In Bob's case, well, he was wrong. He got a little bit unlucky. He lost everything. He put $10,000 in. The property was only worth $100,000. He's not going to buy it for $100,000. So he let it go. He lost his $10,000 contract. Basically, if you look at it this way, Jim essentially collected rent from Bob, right? Jim still owns the land and gets to go out and do it again. So over time, who would you rather be? Jim with the red tie or Bob with the red beard, the gambler, right? I look at Bob as the gambler. Well, I'd rather be like Jim because no matter what happens, I get $10,000 on a $100,000 property, right? Now, the question is, can we be like Jim in the stock market? And most people don't know this, but yes, you can. You can take an asset in the stock market and you can collect rent, as we call it, or squeeze the juice, as I call it, in the stock market. Okay, so we're going to show you, kind of explore how that works as we go forward. So the goal for you is to start collecting income. And if you own the right properties, there's always a gambler like Bob that's willing to pay you that income. You're just on the other side of the trade, collecting the income instead of paying it. So our job is to be like Jim and find all these Bobs and do this over and over again. So let me give you an example of how this works. So here's a stock. You've heard of Harley Davidson, nice motorcycle company, right? Decent stock, maybe. But, you know, we can't predict in the future what a stock is going to do. So let's say 5 years ago, plus a little bit longer than that, we put some money into Harley Davidson. And we did it at, say, $40.25 back in 2016. Now let's fast forward, you know, 5.5 years, something like that. And let's say we put $100,000 into an account, and I'll show you what that looks like. So this little chart here is what the stock did. So you can see the stock went up, and then it went down, and then it went back up again. And it pretty much over 5.5 years ended up back around the same spot, $40. So if you were a buy and hold investor, which I call buy and hope, right? You're holding on to this stock, and it goes from $100,000 to $101,000. Woo! 5 years of investing and you make $1,068. Now, we have a program that I'm going to be talking about called the cash flow machine. Now, you put money in the same stock, but you also find a Bob out there, right? And you start to collect income from that stock. And you do it every week or every month. In this case, we do it monthly. And so we'll show you that, you know, after the first year, it goes from $100,000 to $165,000. Then it goes to $168,000. Now look at the chart on the left. You can see the stock went up and it went down pretty much in line with the green values, right? See those values there? But in the green situation, since we were always finding bobs to pay us rent, we always were piling on money, more money than we had to begin with, right? So even though the stock ended up at the same place that it started, we ended up making an extra $145,000 a year, right? Or over that, I'm sorry, over that period of time. It's about 30% a year on a stock that went sideways. Now, I don't know about you, but you guys get this? Like, is that cool? Hopefully you think this is cool, because this is where I really start to love what we do. Is on a sideways movement, when the market's not doing well, the stock's not doing well, it's doing average, you still end up making some good money. All right. So how would you make money? Well, if you just bought the stock itself, you'd be about even. And if you sold the options, you'd be about making about 2.5% a month. It's about 30% a year, right? Something like that. So let's see. Okay. So that's about 30% a year. All right. So here's how it looks in your brokerage account. I'm gonna switch here and go to a brokerage account. All right. So let's see here. Let me see if I can share this screen. Of course, it's not that easy. Let's try this one right here. All right. Can you guys see that screen? I hope you can see the screen. All right. So we've got an account value. This is just a paper trading account because I'm having some technical issues, and I want to show you how this works. So let's say we see a stock, Apple. The symbol there in Apple is AAPL. It's $153.82 right now, trading right now. Okay. So let's say that we want to buy some Apple, and the market's open right now. So I'm going to go ahead and buy some Apple. So I'm just going to click the buy button. And I'm going to put in what's called a market order, which means I just buy it at the market price. So I'm going to change this from a limit price, which I tell them what price I want to buy it. And I'm going to say, just give me the current market price of Apple. So I'm just going to buy 100 shares. So I'm going to read it back like a good brokerage guy would do, right? I'm going to buy 100 shares of Apple at the market price. Should be somewhere around 153.80. And I'm going to hit the submit button. And let's see if we can do that. There. So now I bought 100 shares of Apple, okay? So it shows right here in my portfolio. By the way, I started with $11 profit because I had just done a little experimental trade before I got on. So full disclosure, it's now showing I'm up $13. So we made $2 on our trade. But anyway, who's counting? So we've got 100 shares of Apple in the account, right? Now, let me show you how you would collect income on the account. Now, there's a lot more to it, but I want to show you how simple it is once you get this down. So you're going to go here to Apple. You're going to see down below that it shows what's called an option trade. This is all the bobs in the world that are willing to buy the contract. Now, one thing you got to know is that you're allowed, even though you don't own it, you're allowed to sell a contract. You're allowed to be on the other side of the trade just because there's a bob out there that's looking for somebody to be on the other side of the trade. And so what you're going to do is you're going to go here and sell one contract of Apple, and let's do it for, let's say, next week. Well, let's do it for next month, okay? 22 days from now, 3 weeks. How's that? So we got 22 days from now, and we're looking at Apple. Right now, Apple is at 153.79, and 153.79 is showing at 152. I got two strike prices here, so we can go to the 155 strike prices. That means if Apple doesn't go above 155, I don't have to sell my Apple at 155. So I'm going to click on this, and I'm just going to click there, and I'm going to sell one contract of Apple, and I'm going to do it at the market price because I don't want to sit here and negotiate for one contract. And by the way, one contract is worth 100 shares of Apple. So I sell, and at about $4.05, I'm going to click this, hit a market order, and there, did it go? Override and transmit. And now I found a bob out there that was willing to give me $4 and let's call it 30 cents, okay, on a $154 stock. So 4 divided, it's about let's see, I'll do the math for you. So it's 4 divided by about 154. Just rough money. It's about 2.6% for the next 3 weeks. That if the stock closes anywhere above 155, and it's already at 153.70, right? 80 now. If it closes anywhere in there, I end up making 2.6%. That's called an out of the money option. We also do in the money options as well. Right now, for some reason, I clicked on the out of the money option. All right, so we clicked on the out of money. We ended up making about 3% for 3 weeks. Pretty cool, right? All right, let me go back to my other screen here and I will pull back up the presentation so I can keep going on that. Bear with me 1 second. All right, so that's what it looked like in the brokerage account. Okay, here we go. All right, can you guys see that? Okay, so that's what it looked like in the brokerage account. Now, here's a guy, he's a physician. I showed you a picture of him a little while ago, and he was basically trading his time for money and working 80-hour weeks. And he found our system, and he's like, I knew a little bit about the stock market, but I've never really been consistent. And then we showed him the system. And after the system, now he goes on these safaris all the time, and he's no longer gambling on buy and hold investments. He's got a way to protect his wealth, and now he loves it because he can plan his long-term investment results. So he's a happy camper in our system, right? So that's just one of the guys. And then he has this little quote: "I was away from the market for years. It's like picking horses at the horse races, but now you've helped me create a solid stream of income. My family thanks you." So that's cool. He did the work, doesn't have to thank me, but he just trusted the system. And now he gets to go out and play golf, and he's looking to buy some island real estate, and he's basically cutting down his work hours and switching his time for vacation time. So that's Larry. So here's the key takeaway on that. And I just wanted to whip through a quick example so you could see that it's easy to do. Basically, you've got to let others take the risk. And when you do that, you leverage all those bobs out there, those gamblers, and you can create your own income stream from the stock market. You don't have to go find a piece of property, locate it, get an appraiser, get loans on it, and all that crazy stuff that you do in real estate. All that's fine. I love real estate too. But in the stock market, you could do it real easy. You saw me. I just clicked on the thing and I found a bob, right? All right. Let's go to key number 2. So key number 2 is I want to show you how to prevent against loss, and I want to turn those unexpected results back into your favor. So some common concerns that I hear at this point, usually when I start talking to people about this, they're like, well, wait a minute, what's the risk, right? And there's too much chance in the stock market, right? And what I want to make sure is that you guys are following along with me. So if you've got questions, let me know. Because I want to make sure that I'm addressing your questions. Hopefully I can see them somewhere. Let's see if I can see them. I can't really see them. All right. So those are some common questions. What about all the chances I'm taking in the market? Now, is it impossible to make these kinds of returns without huge risk? Well, I just showed you a 3% investment, and I didn't even really think about it, right? So if Apple goes up to, a dollar from here, $1.20, you're basically going to make 3%. Now, that's what a bond will pay in a whole year for some people. And you got to make that in 21 days. Well, we're going to leave that trade live, and we'll see in 21 days if it works. And the market's always changing. So how is it possible to turn the unexpected into your favor? I hope I'm going to answer some of those questions as we go forward. So let me give you another example. So this is T-Mobile stock. Most of you have heard of T-Mobile. Here's a stock that started out at 43.05 back in 2016. And then it went to 24.59. So this thing dropped. Now you can see the chart of the stock. It went up a little, but most of the time it was in the red, right? We were in that negative part where we weren't quite back most of the time to our break-even point, right? But using the cash flow machine strategy, like I just showed you on that Apple trade, you get to make some income every week, every month, whatever. In this case, it's every month. And so you took that $100,000 beginning value and turned it into $187,000. And this is a stock that went down. Now, I don't know about you, but it's because we were able to raise our break even that we were able to stay in the stock and not just hope that it comes back, but really hang in there, right? And we never really had that much less money. Look at that green chart. It was almost always, maybe it was always in this case, in the green rather than being most of the time in the red. So we took a negative investment and we turned it into a positive investment. Doesn't always happen, but when you pick the right stock and you pick it in the right market, it sure gets the probabilities on your side. So would you make money in this stock? Well, if you bought the stock, you'd be down 45% in 5 years. In this case, we made about 18% a year, which is a 1.5 on a stock that went down. Like, to me, that is a pretty good investment strategy. Maybe there are other ones that are better. I haven't seen them, but I want to at least expose you to this one if you haven't either. So let's take a look. There's a few beliefs in over 4 decades in the market that I've run across, right? One of those is this thing called buy and hold, where you buy the stock because the market always goes up, right? And you hold it and you hold it and you hold it, and then eventually you're rich, right? But let me ask you, how many of you own Amazon stock that you bought in 2010? Right, me neither. How many of you own Apple stock that you bought in 2003? Exactly, me neither. How many of you own Tesla that you bought when it came out public at, post split twice now at, $10 and you rode it up to 1,000? Exactly, me neither. So it's really hard to buy and hold a stock for a really long period of time. That's why I call it buy and hope, right? Because you're buying it and you're hoping it. And now it doesn't always go up. Something like I just showed you, a stock that went down. So you're going to need a lot of capital when you buy and hold. Your potential ROI is going to go up dollar for dollar with the stock. You're going to win about half the time. You're going to lose about half the time, because for every buyer, there's a seller that thinks he's right too, and you have no protection. Now, if I want to show you kind of a contrast to option buying, right? Option buying is the really risky one. That's where you buy a stock or buy an option and you hope. It's a very leveraged deal. And so you don't need a lot of money. Like Bob didn't need a lot of money to buy that piece of land or to put that option on the piece of land. And you can make a ton of money when you're right, but you're only right, 2 out of 10 times. And you have no protection because you're out there what we call naked. Well, what we do is we flip it around. We do option selling. So you're basically using covered calls, maybe some puts, but most of the time you're doing calls. So let's just talk about calls. And you need some capital. For sure you need capital. You need a little less because you're getting back the option premium. That's your income, like I just showed you. And then most of the time you have the options skewed in your favor because you're a seller. So instead of losing money 80% of the time, you make money kind of towards 80%. I can't say that it's 80%, but that's certainly the target. Way better than shooting for 20. And the protection you get is the income that you're making every week or every month or whatever. And we also have this thing in our program called trade adjustments, which I'll talk about in just a second. Okay, so that's really the secret sauce to what we do, is that you get the option premium and you get the trade adjustments. So you're getting income into your account even if things are going down. So let me explain a little bit how that goes. So when you compare it to buy and hold, you get this green area where if it goes up, you're in the green. If it goes down, you're in the red, right? You're losing money. If a stock starts at 500 and immediately goes down, you're immediately in the red. Not a good position to be in. You're already losing money. In a covered call situation, basically, let's say you buy the stock at 500, you sell an option against it, like I just showed you how to do, and you get, let's say, $5. Well, you bring your basis down $5. So you've got a lot more room up top where it's green, and you've got a lot less room in the bottom where you're losing money, okay? When we add to it a trade adjustment, which is a little bit complicated, but it's got some rules to it when the market's going down or your stock's going down, you can still adjust your trade down and still bring income into your account. So same profile on the left with buy and hold, you got a lot of red, but when you've got a covered call, you've got a lot of green. Now, when you add to it the ability to adjust your trade down if the market moves against you, which is a strategy, now you bring it down even further, okay? So that's a really cool thing. Anybody with large savings looking to make money work for them, right? You don't have to worry as much. You still got to think about it, right? But your break even just keeps moving down. And so as your break even moves down, it brings your chances of making a profit higher. And that's what we want. We want to get those odds stacked in our favor, get the probabilities in our favor, get the odds moving higher that we're going to make money. So when you use a strategy with built-in protection, when you use a strategy that has a way to adjust your position, right, and to flip it from a loser into a winner, then you get to protect against loss and you get to create income from that strategy. Two really critical things, I think, to any good investment strategy: protecting against loss and figuring out a way to make it cash flow, right? Cash flow is king. You've heard that before. Figuring out a way for your investments to cash flow, right? Now, a lot of you may be asking this question because a lot of people have asked me the question. Sounds too good to be true. Why do you share it? Why doesn't everybody do this? I get all these questions, right? So I took an account that I had. I had this little IRA sitting there, had $111,000, and I was investing in some Twitter or something silly like that. And it wasn't doing anything. I said, you know what? I'm going to put my money where my mouth is, and I'm just going to do the cash flow machine investing system in this account, right? Now, this is all the account values and results that I got from my account in the IRA, right? And I'm going to give you the results through about 2 years, something like that. Well, let me show you where it starts. Here's the Schwab statement, and you can see I circled it's 111,822, right? On April 30th of 2020, right in the middle of the pandemic, right? So that's what the account was worth. And I'm going to show you, these are all the trades. Yeah, I'm not going to spend too much time on this, but these are all the trades that we did. And you can look at it and you could see most of them are Netflix, right? You could see call Netflix up here at the top and go through. These are all the trades we did in Netflix in 5 weeks. Now, it's a lot and it's more of the advanced strategy, but I'm just giving you an example of what can be done when you learn this right. So we made $19,000 on $111,000 invested, and we did that in 5 weeks. Pretty good return, right? 12.4%. Yeah, Mark, I know, but it was during the pandemic and the market went up and you got lucky. Okay, I'll give it to you. I got lucky. All right. So let's go to the next month, right? By the way, the S&P 500 went up 7.6%. We did 12. The Netflix went down. We still made 12, right? Okay, we got lucky. All right. The next month goes by. Here are the trades we did. You can see it's all in one stock, Netflix. And you can see at the end of the month, we ended up making, a cumulative now, another 12%, let's say, right? So now we're up to 24.7. The S&P 500 at that period of time was up 9, and Netflix finally started to move in our favor. So we made a little bit more money too, okay? Now, maybe we got lucky again, sure. 90 days. Now I'm going to go through these a little factor. You can see we're still in Netflix, and now we're up 31.7% in 3 months. Now, I don't know about you, but I like 31.7% in 3 months, right? I think that's pretty good. Let me tell you, doesn't always happen, but it certainly happened here. Now, I'm getting lucky 3 months in a row. Like, do you hit the lottery 3 times in a row? I'm not saying this is the lottery. I'm just saying you don't put together 3 months unless there's a pretty decent strategy. So there's 3 months there, and you can see at the bottom. Now we're up $50,000 on a $111,000 investment. So we're up 31%. Okay. Sure, the market's moved up 15%. Sure, Netflix has moved up 15%. We're up 31. Okay. Let's go 4 months. Now we're up 67%. Okay. And you can see that halfway through the month, we flipped to another stock. Netflix was showing signs that it wasn't the stock that we wanted to be on. Usually there's only a few stocks that we want to be in. And so we switched to Tesla. We've been pretty much in Tesla ever since, by the way. But now we've got 67% in this stock, and we're using the rules and the strategy. And then after 5 months, we're up to 85%, where we've made 96 grand in that account, or I have, not you, but not we. All right. And so we're doing pretty good. Hey, now we've doubled the account. We're up 100% in 6 months, right? By October 31st. And you can see all Tesla trades, and we're now up to $225,000 in value. Here's the statement, right? $225,000 in value. So that's where the account is after 6 months. Okay, that's Schwab's statement, and I blacked out the account number so nobody does any funny business on me, right? All right, let's keep going. Let's fast forward out to a year from then, right? September of 2021. Now we're a year and a year and a half, something like that. The account's now up to 373,000. Okay, we've had some fluctuations in the market, and it's not going up as much as it was in the beginning, but it's still gone up to 373,000. Remember, we started at 111. All right, and then I'm not going to bore you with all the months and all that kind of stuff. Let's just go to the to this period of November of 2021, and now it's 527. I'm not going to show you all the trades. They're all Tesla, by the way. And you can see that the account in November is 527,000. And then I just took a little snapshot of my online trading program. It's not the account statement like I was showing you, but now you can see the date. 23 months later, it's what is that? March 29th of 22. The account is worth 708,000. Now that's after 23 months. And I just basically stopped, doing screenshots and all that stuff. And by the way, the market went down, and I gave up some of that money for sure. Right? We had a down market starting, this year, and I'm like everybody else. I lost a little bit of money too. The deal is I just didn't lose as much, right? And plus, you build up a nice cushion when you can take your account from 111,000 to 708,000, right? All right. So I want to tell you just real quick about Lori. I've mentioned her before. She's the one that travels all the time and goes to Peru and Ecuador and Egypt and all this stuff. She's the mother of a couple of kids. She was stressed about her savings. She was taking all these options courses and all these other people that were teaching her options, and she was just frustrated and actually a little overwhelmed. And we met, and she's like, I can manage the money myself now. I showed her how to do it. She made a couple $100,000 in a couple months. That didn't hurt, right? She starts to trust the system, and she's grown her wealth now past the $1 million point. She lives on her investments. She travels around because she loves to travel like I do, and she has a blast, right? And so that's the life change that she made. She made from, she went from worrying about what was going on in her account to like, how do I transition? I've got all this knowledge, but I still don't know how to do it, to now I've got a system. Now I can relax. It's that imagine thing that I did earlier, right? She can relax and think about what she's gonna be able to make. So whatever it is for you, like maybe you want to just spend more time with your family. Maybe you don't want to travel. That's cool. I travel, but it's not for everybody, that's for sure. I can tell you that the way I feel today after traveling a 10-hour flight overseas. So here's the takeaway. You can reduce your risk by using a strategy that has protection. Now, here's what you really do. When you reduce your risk, you sleep better at night. You don't worry about your investments, right? You start to have a strategy that feels good, right? Because trading is 90% mental, like I always tell everyone.
Feels good,
If your
right?
mindset is right, your trading strategy can be a lot more calm. You don't always trade from emotions. Emotions are the enemy of the investor. The enemy. You cannot make decisions from an emotional state, right? You have to be solidly on a certainty state, not an emotional state. And that's what rules do and a system does. So this one is a critical one, and that's adapting to any market, right? You have to be able to adjust to the market, right? The market's never the same twice. If you're a boxer, another sport analogy, right? You're not going to get in the ring and expect the guy to always come at you with the right jab. Sometimes he's going to come up with a left hook, right? Sometimes he's going to duck. You have to be able to adjust to what's going on. And that's a beautiful thing about our system, is that on the fly, we give you some ways to adjust. So let me take a quick break and say, I know at this point there are some common concerns. So I've listed them here, right? So maybe you've got a question like this. So think about the questions you might have. Now, be honest, right? Do you have a question like this? Give me a yes or a no or maybe in the chat about, if you have any questions like this. So how will I make any money just hitting singles? Making so little, how much work is involved? 24% a year is way more than the market average. How is it possible? I mean, these are the questions I've been asking since I was a kid doing this. And it's a question that I get all the time. And these are good questions. So if you got them, let me know. Yes, maybe, whatever. Maybe even write the question in the chat. Let me see if I can monitor that chat real quick. And let's see, I can't see the chat. Awesome. Let's see here. Nope. All right, so I don't see the question. So these are probably some of your questions. Good thing I had them, right? All right. So, those are definitely some common concerns for sure. All right, so now we talked about a stock that went up. A stock that went sideways, a stock that went down. Let me show you what happens on a stock that goes up. So we all know Netflix. We all watch Game of Thrones or whatever, and I don't even know if it's on Netflix actually, but Breaking Bad or something. I know there's something on Netflix that we're watching because the stock's gone up like crazy. So here's the stock that started out in 2016 at $97, and by August of 2021 it was at $515 when we just did this little study, right? So you start with $100,000. By the end of that period of time, the stock has done incredibly well. It's gone up to $515, and your account is now worth $530,000 if you did buy and hold. Here's a situation where buy and hold worked, right? Didn't really work so well in the other two situations, but here's what worked. In the cash flow machine trading system, it's gone from 100,000 to 600,000, 661 actually, right? So even in this situation, you end up making an extra 131,000 roughly in the account in 5 years, even when the stock goes up. So now we've got a stock that went up, a stock that went sideways, a stock that went down. And because we're creating that cash flow, we're able to create that cash flow in the account and make more money on it, right? I hope you're getting this, right? I hope you see that this, even, no matter what situation you're in, it's better than not doing the income strategy, right? If you just did the buy and hold. So let me just kind of give you this little flash of a slide. So a lot of people are in this bear market right now. And I'm going to tell you, this is not a perfect system. I don't know if there is a perfect system, but I could tell you it's more perfecter than maybe some other systems. Actually, here I have a chat. Okay, so let's keep going. So in this system, you have the bull market, you have a sideways market, you have a bear market. We're in a bear market. We've been in a bear market this year. If you buy and hold, you're definitely losing money, right? For sure, you're losing some money. In the cash flow system with just covered calls, which you can do just very easily, you're at least even, or maybe slightly above or below, depending on the stock you pick. And if you're in synthetics, at least you're even. But man, you give yourself a lot of other chances in sideways and bull markets of making good money, while kind of avoiding that really getting hammered losing money strategy, unless you pick a really bad stock. And so we always talk about the right stock in the right market at the right spot on the chart. 3 critical things. Okay. So how can the system really adapt to the market without predicting it? Well, we've got some rules. And the rules are the things that are there to keep the emotions out of your trading. Really critical to have rules, right? Otherwise, you're just guessing, using your intuition, using your gut all the time. And it doesn't always work. So my trial and error to kind of create these rules has been about $2 million. Made a lot of money, lost a lot of money in the market, gone to seminars, studied this stuff, put my own money in it, put it into my hedge funds, put people into it, taught people. A lot of rules, right? And the rules are there to protect you, right? So that's the deal. It's cost me a lot of money to be involved, but some of the big rules that we have, we have lots of little ones, but we have some of the big ones, and I'll show you what they are. First of all, you've got to pick the right stock, right? People are like, what stock should I pick? Well, that's part of it. And we have 11 indicators in our system which help you find the juice, basically, right? They help you pick that stock and find the right one so that you can create that income, create that cash flow. Then you can't just have the right stock. You've got to know when to get in and when to get out, because not all markets are the same. And so we use a market timing indicator that kind of tell you, hey, listen, when we've got a red market, because we use red, yellow, and green lights, when we've got a red market, it's time to be a little more conservative. Let's play a little more defense. When we got a green market, we push on the accelerator a little bit. We take a little bit more chances because the probability is in our favor. And so that skews our investments even better during those green markets. We can't predict them with 100% accuracy for sure. Again, this is about probabilities. So we've got what stock to pick in, what to pick, and when to get in, when to get out. So whatever you use, you've got to have a couple of components that give you an edge. And these are 2 things that give us an edge. Now, a lot of people are like, yeah, but I don't want to learn all these rules. I don't want to spend a bunch of time learning something. And, like, this is not what I want to do. I still have a job to work, or I want to go enjoy my life, whatever. There is a time commitment up front of learning a system, like anything, but it's not a huge one, right? It's not like a 4-year degree or a 2-year degree. It's, how long does it really take to set up the system? Right? Good questions, right? How long does it take to run the system? How am I going to have to worry about the system when I drop the kids off? Am I going to have to worry about, when I'm on vacation, making my trades? What's going to keep me up at night? All those kinds of things. Is this going to run my life, or am I going to run it, right? Am I going to be able to watch my earnings grow? Well, I don't know if you noticed, but we haven't really checked our Apple in a while, right? It's just doing its thing, right? Time will tell us what to do. Now, if we have to make a trade adjustment, we're going to go in there and make a trade adjustment. But by and large, we're going to let that run its course, right? And so it doesn't run your life. Once you make the trade, you let it go until the trade is about to expire, or you need to make a trade adjustment, and then you make your adjustment. So what I like to tell people is that this is more of a system on autopilot than anything else. Once you set it up, you find your stock, you set a guard to alert you when it's about to go down or when things are going down and you need to make an adjustment. I like to tell people it's about 20 minutes a week to 20 minutes to an hour a week, or 20 minutes to an hour a month if you do it on a monthly basis, right? So you collect rent on your last option on Friday, or the expiring Friday, and then you pick your next option and you just rinse and repeat. You do it over again. So the question I get a lot is that, what's the catch? Well, there is a catch. Here's the catch. You give up the big home run. You're not going to go to the cocktail party and tell people you bought a stock at $1 and it went to $100 and you're brilliant. You can't do that anymore, right? You're going to miss out on that boasting ability, right? You're not going to be able to talk about how sexy your stocks are, the neatest, exciting things that people are talking about. You're going to be able to talk about some pretty cool stocks. We're in Apple, we're in Tesla, we're in Amazon, but you're not going to be able to talk about that brand new stock that came public that all your buddies are going to be making a ton of money on, right? The downside to this, the catch to this, is it's a boring system. We had a discussion in our mastermind group last week where, all the people get on every week and we talk about it. And they're like, they're getting bored. And I said, this is the boring way to make money, right? And we all laughed. because it is boring. You're always looking for something exciting to keep you enthused, but it's freaking boring. I can tell you, right? It's like watching paint dry. So you put your money in, you don't touch it, you let it build. Or if you want to, like one of my friends is using it to create income, and he's creating about $16,000 a month in income on his Apple, right? So it could feel like a slow, boring way to make money. Here's the takeaway for you, right? I want you to learn this. Like, I want you to learn that you've got to have a proven system. You can't just invest based on Kramer. You can't just invest based on some magazine that you read or the latest stock tip. You've got to have a system, and that system has to have rules for the right market condition, right? If you got a market that's going up, you got to have rules for it. Market's going down, you got to have rules for it so you don't get slaughtered, because markets go down, as you know, right? So let's go over real quick. You start with collecting rent, right? You find a gambler out there that's willing to pay you for a stock, you sell it to him, or an option, you sell it to him, and you collect that rent. Pretty cool. I showed you how you reduce your risk by doing trade adjustments. The market goes against you because we don't know where the market's going to go, but at least you're prepared and you have a system for creating those trade adjustments. We have a system for adapting to any market, right? We got a red, yellow, green light that's telling us we should be conservative, we should push on the accelerator. We're going to use that because it's about probabilities and it's about your mind. And I want to stress that to you. So let me go back to kind of the beginning and say, how would it feel to consistently make money in the stock market? How would it feel to know when to get in or get out of a position because you're not guessing or listening to somebody on TV that's probably already traded the stock way ahead of you, but you have your own rules that are coming from a system that's proven? How would it feel to have a clear path toward a comfortable retirement where you can work less, enjoy life more? That's the question I want for you. At the end of the day, here is the absolute truth, and that's what sets the 1% of traders apart from the other 99 is not how smart they are, their professional success, how rich they are, nothing like that, okay? Because there's plenty of ways that you can get rich by trading your time for money. Plenty of ways, right? It's called a job, just over broke, maybe not. But you can certainly trade your time for money. It's when you take the next step, right? It's when you start making money in the stock market from your experience. And the experience comes from my experience. If you want, you can borrow my experience, right? Less trial and error, less money that you waste trying to figure out what stocks to buy. Yeah, you're not going to be 100% right. It's never going to happen, right? But you're going to be right more and hopefully right richer, right? That's what I want to tell you. Successful strategy, traders just end up having a strategy that works. And that's really the key thing. It's a strategy. It's not a guess. It's not intuition. It's nothing like that. So if you're ready to start collecting stock or rent in the stock market, it can be done. And I hope I was able to open your eyes to how you can do that. By the way, if you want to talk to us a little bit more about how to get into it, learn the rules, learn the system, dedicate that 20 minutes to an hour a week or a month or whatever you want, my team is going to set aside a little bit of time and to decide if the system is good for you. And so we'll just have we'll have a short call, and me and my team talked about it, and we're not going to do a sales call. We're just going to do like a call that allows you to just ask some questions to figure out the situation and see if it's right for you. This is not right for everybody, by the way, right? So if you're ready to start collecting money in the stock market, we want our community to serve you, and we want to be able to help you, okay? So we have additional training. Drop system in the chat, and Brooks is going to reach out to you in the chat. So I don't want to belabor this. I think you guys are getting the gist. You buy the stock, you find a gambler, he gives you money, you collect that money, that reduces your risk, it creates income, it lowers your risk, it increases your chance for making success. And drop the word system in the chat, and Brooks is going to reach out to you if you want to just have a chat with us. And then, we won't put a hammer in on you about how you have to buy this or buy that. If it's right for you, then we'll talk to you about it. If it's not, we'll talk to you about that too. By the way, we have weekly market updates every Friday in this group. And if you're in this group watching this, you're able to get access to those. And I do those, Friday afternoon, usually between 3 and 4 o'clock, because that's the time that the week's about to end. And I tell you what happened that week. And, we go live and do that. It's kind of fun. It tells you what trades you could have looked at or you could look at, and tells you what the market's doing. I really spend a lot of time going over the market because I think that's a critical component. You got to know what charts to read, and you can ask your questions live in the chat if you happen to be on there. Anyway, all right, enough of that. I hope I was able to help you. Let's do some Q&A. If you guys have any questions, Throw them in the chat. Brooks, if you could, Brooks is my business partner, by the way. And Brooks, if you wouldn't mind throwing them in the chat on the Zoom, if nobody's on Zoom, let's say they're on Facebook Live. I can't see the Facebook Live really easily. So if you could throw them in Zoom, that would be just great. Okay. Let's see here. Oh, there's a Q&A section. Anybody have a question? Who has the first question? Now, one question I'm often asked is like, what's to the learning? Well, we've got a bunch of ways that you learn this stuff, and one of the ways is through a course. So we have a course that I'm very proud of. It's pretty much my life's work. It's got a bunch of video modules in there, which I hope are fun, and I give you analogies and easy ways to learn, and then I see how you did. I give you a quiz and maybe a final exam, things like that, because I want to make sure you're getting it as we're building this building. We start with the foundation, we add the blocks around the wall, we start to put in the other, the electrical stuff, the plumbing and things like that. And then we start to build this thing until it becomes a masterpiece. And let's see, if you sell covered calls. So Jennifer, thanks for your question. By the way, Jennifer, thanks for being a big fan. I hope it's at some point we're helping you and that your investments are doing really well. And if we could do anything for you, and I see your name all the time, I sure appreciate you, by the way. So if you sell covered calls on SPY, what kind of returns have you achieved using your system? So I don't sell covered calls on SPY because SPY has a couple of drawbacks with it. Number one, it pays a dividend. And when you're short the option, that means you're responsible for the dividend. And the dividend happens very regularly. And so to me, why would you invest? And this is actually a really great question. The S&P 500 is like 500 of the biggest stocks, right? You know them. Coca-Cola, IBM, Apple, Tesla, pretty much all the big ones you can think of. And that's an average return. And I know they tell you to diversify, but I can tell you this. If you get an average return, you're probably going to get about 8.5%, 9%, at least over the last 100 years. That's what the market has done. That's an average. I did a study in 2013 and 14. I don't want to spend too much time on this, but I think it's important. In 2014 and 13, the market went up 28.9%, if I remember my study correctly. So that's 500 stocks. And those are the average. If you shot for average, you did pretty well. You did 28% in 2 years. You got lucky, 2 years. That's pretty good. But I don't wake up in the morning going, oh, I want to be average today. I wake up in the morning going, I want to be excellent. So I took the top 10 stocks over that period of time that are in the S&P 500, and you know what the return was on those? It was 185%. So when you buy the right stocks, easier said than done, I know, but when you find the right stocks and you collect income on them, you totally increase your odds in your favor. So I can't give you an answer. I can just tell you that if the S&P 500 does 10%, you'll probably end up doing maybe 13%, 14%, something like that on that investment. But I don't like ETFs because they have that dividend problem and they're investing in average things, right? So there's not a lot of volatility to them. So they don't create a lot of income. It's almost like there's other better stuff to do. And I show you how to do all that. But that's a great question. Hope I was able to answer it. John Pope. Netflix had a massive drop in April. What was the exit strategy? Well, we exited. Thanks, John, for your question. We exited Netflix a long time ago. Most people were out of Netflix because we use relative strength as one of our indicators in our we have 11 indicators that we show you. Relative strength is a really important one. And when people are selling out of a stock, we don't wait and watch it, right? Unless it's just dropping a little bit and we can collect income and offset our losses. We have to really believe in the stock. When it started to report trouble in paradise, like it was losing subscribers, it was losing earnings, it was having to spend more money, they were raising their prices, those kinds of things, we kind of, it didn't fit our criteria anymore. And so when a stock doesn't fit our criteria, we bail and we find a better stock. At any one time, there's just a handful of stocks that meet our criteria, right? A lot of people try to trade penny stocks or pot stocks or the most exciting stocks of the day. They don't always fit our criteria. We want to have what we call solid, exciting stocks. You'll learn that if you take our course. Solid, exciting stock. What makes a stock solid? Earnings growth, sales growth, return on equity, good management, good products, increasing, numbers, right? That's what we want to have around a solid stock. But we want it to be exciting, right? ExxonMobil, while it's a pretty decent stock these days because oil's going up, you could probably can't tell me a lot about Exxon other than it's pulling oil out of the ground, right, or out of the ocean. But you could tell me a lot about Tesla, I'll bet, or Apple, I'll bet, or Amazon, I'll bet, because these are exciting stocks. They're things that are they're moving around, they're in the news. That's what we want, a little bit of excitement, but on a base of being solid. So the exit strategy on Netflix, we were out when the indicators told us to be out. All right, let's see what else we got here. All right, let me go back up. Wow, good question. I'm going to blow this up here. All right. Do you not pause premium selling if implied volatility is too low? So, Michael, that's a pretty advanced question on that. We don't like stocks that have incredibly low volatility, but we want solid stocks and we want them to be exciting, which leads to the higher volatility. But it's a great question, and we don't pause premium selling. We are always selling premium. We don't ever change our strategy, just so you know. Amit, thank you for being here, by the way, and thanks for being early. Why did you decide to stop trading Netflix at the right time? Well, it was, again, relative strength. How do you know how to find good stocks for options? Seth, and by the way, Seth, been friends with you for a long time, so thanks for being here. Finding good stocks for option is really a question of solid, exciting, and we have criteria for solid, like I just mentioned, and they're not all good. Like there's some stocks out there that are like AMC last month was crazy. You could have made a 20. I think we had somebody in our system that he was playing around because he got bored. Remember I told you get bored, and he made like 12% in a week. But the week after, the stock dropped by about 20% and got hammered. So we don't want to be in all the stocks, even though they might pay you well for a week. There's a lot of risk. We want a solid company, and we want to be able to have it be exciting so that we sell options on it against it so we get some premium. But we don't want them to be too exciting like AMC. We don't want these meme stocks that are manipulated. We want to stay out of those penny stocks too, by the way. All right. Peg, back to the 100 shares of Apple. If it goes up, it sells. If it goes down, you collected rent. You keep the 100 shares. Absolutely right. Just like Jim, the real estate guy, he gets to keep his lot. You get to keep the Apple and you go back and sell the option after it expires the next time. So we go out a week or a month or whatever, like I just showed you. So yes, absolutely. You get to keep the Apple. And if it goes up, we generally, in our system, we generally don't let it expire. We roll it, right? That's a difference between our system and almost everything I've seen in covered calls. Is we want to roll those things. But that's a great question. Sounds like you know about options. Amit, again, do you add hedge to your covered call strategy? I mean, in addition to sell, do you buy a put option? We have an advanced strategy in there. So my job is to give you guys in our program a toolbox, right? So the training is the toolbox. And if you go to a job, you pull out, you might have to change a door. So you pull out the screwdriver and the drill and the hinges and, the level, right? But if you go to a different job in a different market, you might pull out the saw and the auger and, whatever. So you get different tools for different markets. We do have a strategy that we don't emphasize on buying a put collar, and that protects your downside. But like any insurance, you're betting against yourself, and it's usually pretty expensive when it comes to buying puts. So while we talk about it and we use it as a strategy, we don't emphasize it as a strategy. So it's just an option of a tool to pull out of your box. Great question, Amit. John, another question. If you've made a positive return this year, I'll be impressed. Good, then you're impressed. Woohoo! Because I have had a rough second quarter, though, I can tell you. But we lost money second quarter. We made money in the first quarter where things were really dropping. And this quarter, we made a lot back, right? So we've actually, I believe we're back up over where we started. I haven't done the numbers for the quarter yet, but you should be impressed because I think we're going to be, we'll hopefully end the quarter right where we are. And right now, I'm pretty darn sure we're pretty green. But I haven't done the numbers because I don't watch it every day, right? I don't watch my value every day because I think that creates emotion. So I know what's going on. I tend to it. But I don't look at the value like I'm up, I'm down, I'm up, I'm down. It's not the way I trade. 2020 was a weird year because there was a 30% drop in the market, and then it fully recovered in a few months, not taking away from your performance. But what happens if the market doesn't rebound quickly? If it doesn't rebound quickly, we collect the rent. So that's okay. We're in Tesla right now. Tesla's gone up, and Tesla's gone down, and it's gone halfway back up. And we've been riding the wave of Tesla this year because and other people have gotten out, by the way. So that's another tool in your toolbox. You're allowed to get out. There's certain rules that'll take you out. I prefer to stay in and collect the rent even during the rough times. So I've ridden Tesla down 50% and back up, right? So we've been collecting that rent, and you know the system is based a bit on volatility, excitement, and when things are exciting, you make even more money on the sell because more gamblers like Bob are willing to spend more to have the option to make a killing. We get to collect that premium. So, John, I hope I answered your question. I tried to be as honest as possible. We're making money, and it's working. And I've been in cash now. I was probably one of the only people that I knew in cash in this that I wasn't in cash in this market, but also one of the only people that made money by not being in cash. I've sold puts and covered calls, John said. Works great in sideways bull market. What happens if there's a sudden 20% plus bear market? That's what's had some ETFs I bought at the end of last year. Are you hedging or something? Yeah, again, ETFs for me, I don't like ETFs because they don't give you enough premium to protect you when the market goes down, right? So the bang for the buck isn't there. I'd rather have an Apple or a Tesla or an Amazon, something that has, when the market's selling off, Apple was still getting some relative strength. I'd rather have people putting their money in a company that's got some relative strength than just bailing on a company and having a really, crappy company. So, yeah, you get a bear market, you're going to ride a bear market down unless the rules take you to cash. And they did. We have a red market that when it goes red, you have the ability to sell deeper or you can go to cash. And a lot of people went to cash. That's cool. And they prevented loss. They also missed the up when it bounced, right? So we like to get the up when it bounces. So we kind of stay in as long as we can really keep our head straight and keep going. What's my view on the wheel strategy? All right, the wheel strategy is beyond the scope of what we do. It's you sell a put to get yourself into a position. And if you're selling puts, your brain has to be scrambled, right? Because you're selling something that's betting the stock is going to go down. Anyway, you sell a put and then you start to do covered calls on it. We've done a study on that. Selling puts is a great strategy. It just doesn't have the bang for the buck for us versus covered calls. So we'd rather protect ourselves when a stock is going down or where the market's going down and make that money when the market's going back up, collecting that premium the whole time, all the way. So Jennifer, I think, had that question. Michael Kovacs, but ETFs don't have earnings to worry about. You don't want to sell options going into earnings. Great question, Michael. Yes, you're nailing this. We believe that there's 4 times a year where you don't want to be exposed to a stock. And that's the 4 earnings dates every year that you have the ability to be either deep or in cash. I personally, most of the time, prefer to be in cash. Prefer to be deep. A lot of people who use our system, they prefer to be in cash and protect themselves against these crazy markets. And that question that came from John, I think earlier on Netflix, Netflix, that was down huge on an earnings release, right? We have the ability to be out of those markets. So why not protect yourselves during those crazy times? Yeah, you don't make the killing, but so what? I'll give up the killing 4 times a year so I don't lose my butt 4 times a year. Hope that makes sense. Amit asked a question about how many stocks do I hold in my covered call? Well, first of all, almost everything I do now, and I say almost because I have a few other things that I do, is this cash flow machine program. And I don't believe in diversifying within a category. I believe in concentrating within a category. Cash flow machine is a concentrated portfolio. We basically buy a portfolio of stocks that we believe in. In this case, it's Tesla. You heard it. We have one stock. And we basically sell calls against it. You know why? Because if Elon Musk tweets something crazy, if he dies in a plane crash or a rocket crash, right? If the company has bad numbers, there's four earnings dates a year that I have to be careful of. Like, I've got to know a lot of stuff about that stock, and I've got to be apprised of it. I've got to be aware of it. Imagine having 10 stocks. Now, instead of having 5 different things to watch, I've got to have 10 times 5. I've got to watch 50 things. I can't watch 50 things. My brain doesn't work that way, right? Most people's brains can't work that way. So I believe in having 1, 2, maybe 3 stocks. And my mentor, Bill O'Neill, is the second greatest trader of all time, says, if you got like a $5 million portfolio, you shouldn't have more than 4 or 5 stocks in it. And I kind of agree with that, kind of back to that S&P 500 analogy I gave you. So thanks for that. So I believe in putting all your eggs into that one basket and watching your eggs very carefully rather than having a bunch of eggs in a bunch of different baskets. That's probably a better analogy. Jeffrey, what has been your historical percentage and how often are you called out? So, I don't really talk about historical percentage very much because a lot of my investors are proprietary. I can just tell you I just showed you what my portfolio did, right? Now, that's not a typical portfolio. I had a good couple of years, no question about it. I took 111,000 and turned it into 58,000 or whatever. Hey, that's not typical. I talk about what most people can do and should do is take this strategy and grow with it. Start with shooting for 20% a year. That's not bad, is it? Like, that's what you like. If you shoot for 20% a year and you get 20%, and I'll do a couple headstands and show you that I can make you 20% a year, or I could show you how to make 20% a year. Easy. I could tell you that I've got people in my hedge funds that are really, really happy, and we've done pretty well. I've had a couple of bad years, I'll be honest, and those are learning years for me, right? So when I learn something, when I lose money, or I lose money for my friends and family, that's the worst, right? I take that and I'm like, okay, how can I prevent this from happening? And that's what's created this system. That's what's created this system for rules. How often am I called out? Almost never. Almost never, because like I said earlier, I alluded to it. I like to roll my positions, and we have rules for when to roll and how much time premium is left in those kinds of things, and those odds work in my favor. So that's what I like to do. Is I don't like to get called out. I like to roll and just keep collecting that rent. So thanks for all your, I think I got everybody's question. That's awesome. Thanks, by the way, for your questions. I appreciate it. And thanks for hanging with me to the end. So let's see, there's something else that came in. That's all. All right, cool. So listen, everybody, thank you so much for being here. I hope you were able to take a few things away. No matter what, make sure you hedge your risks. Make sure you protect your downside. Make sure you invest for cash flow, no matter what you're investing in. And make sure that you have a solid, proven system that's going to take away the emotions from those decisions. Because I don't know about you, but I make really crappy decisions when I'm emotional. And I think most people do. And so that's what I was trying to get to you, is to show them, if you want to put the word system in the chat, go to the Facebook group, which now you're a member of. If you're here, put that word system in there, reach out to Brooks. Let's have a chat, see if we can help you. We've got a mastermind, which I'm really proud of, which has, a whole ecosystem around this so that you're immersed with other people and doing the same thing. And we're all in the same thing together, and we're all traveling together, and we're all learning from each other, and we're all probably doing a lot of the same stocks. So you don't feel like you're out there on an island, right? We have that mastermind group, to me, is worth its weight in gold. And, if you just want to hang out with us, I do those live Facebooks on Friday. In any case, love to get you into our world, or I'd love to be part of your world if that's the case. But if it doesn't happen, that's cool too. I just want to thank you for being here, and I want to thank you for your time. I know it's valuable, and I hope you have a fantastic rest of your day and rest of the week. Take care.